So here's a story I like to tell, and I want you to really sit with it for a second. March 9th, 2009. Markets are a disaster. Lehman's already gone under 6 months earlier, everybody's retirement account is basically cut in half, and every headline you open says some version of worst crisis since 1929. Total panic. And in the middle of all that, there's this teacher. Call her Margaret. That's not a real name, but the story is real enough. Who takes the $50,000 she'd been quietly saving up for a house down payment, and she just puts the whole thing into a plain S&P 500 index fund. No stock picking, no fancy timing. Her family thought she'd completely lost it. And today, that $50,000 sits at around $590,000. She didn't have some secret edge. She just saw fear creating value, and she had the nerve to act while everyone else froze. Now, look, here's why I'm bringing this up. I genuinely think we're sitting inside a moment like that right now. Not a crash this time, something arguably bigger. The number you need to know is $124 trillion. That's roughly what's going to change hands over the next 20 years, and almost nobody's talking about it.
Quick bit of context first. After 2009, the S&P didn't just recover, it went on the longest bull run this country's ever seen. From the 2009 low through January 2026, it's up over 900%, and it just broke 7,000 for the first time. So $100 put in at the bottom is worth close to 1,000 now. And here's the part that gets me. It wasn't hedge fund guys who made that money. It was teachers, nurses, regular working people who just kept feeding their 401k while the headlines screamed at them to panic. Look at the household numbers. About 8.4 million millionaire households in the U.S. back in 2010. Almost 24 million by the end of 2024. That's over 15 million new millionaire households in 14 years. UBS put out a report in 2025 saying the U.S. added 379,000 new millionaires in 2024 alone. That's something like 1,000 new millionaires a day. And most of them didn't inherit a dime or sell a startup. They just stuck around long enough. UBS actually has a name for this group. Everyday millionaires. People sitting on $1 to $5 million net worth. Worldwide, that group's quadrupled since 2000. Something like 52 million people now, holding over $17 trillion between them. Okay, so here's the actual headline. Cerulli Associates put out research in 2025 saying roughly $124 trillion in assets is going to move hands between now and 2048. That's not a typo. And it's the single largest transfer of wealth in human history, bigger than every country's annual economic output added together. The mechanics aren't complicated. Baby boomers, born 46 to 64, currently sit on about 52% of all the wealth in this country, somewhere around $78 trillion. The youngest of them turned 62 this year. The oldest are closing in on 80. Over the next couple of decades, that money moves. To kids, to grandkids, to charity. Cerulli's estimate is something like $16 trillion straight to heirs. Another $18 trillion to charities. Gen X is looking at roughly $39 trillion coming their way. Millennials? Around $46 trillion. But, and this is the bit most people miss, the real opportunity isn't the inheritance itself. It's what happens once that money actually starts moving. It gets invested, spent, poured into businesses and real estate and markets. And that movement is what creates room for the rest of us to catch something. You know the GI Bill story, right? Soldiers coming home after World War II, buying houses, starting businesses, basically building the American middle class from scratch. That generation is the one transferring its wealth now. And we're watching a similar story play out again, just on a scale nothing before it can really compare to. And the parallel to 2009 is worth sitting with.
Back then, assets were cheap. A wave of stimulus money was coming, and people were either too scared or too broke to move. This time, there's no crash, but there is a wave of capital coming. Except instead of the government, it's the richest generation in history handing things down to their kids, at a scale something like 25 times the entire pandemic relief effort. All right, strategy. First thing, don't build your whole plan around an inheritance. Cerulli's numbers show 62% of this transferred wealth is sitting with just 2% of households. Most of us aren't getting some life-changing check in the mail. What we are getting is a front-row seat to an economy with $124 trillion sloshing through it. Money flows into retirement accounts. Prices climb. Heirs go buy houses. Real estate prices climb. Fresh capital funds new businesses. Jobs get created. Everyone gets a little wet from that wave, one way or another. Second, younger investors just think differently than their parents did. Bank of America Merrill Lynch found that 72% of investors between 21 and 43 don't think stocks and bonds alone can get them above average returns anymore. Which tells you something. AI infrastructure, clean energy, healthcare, digital assets, that's where a disproportionate slice of this redirected money is heading. Third, location's going to matter more than people think. Boomer-heavy suburbs and retirement towns might see more homes hit the market and softer prices, while the cities younger people actually want to live in get more crowded and more competitive. Put $500,000 into Austin versus Cleveland, and you'll get two completely different outcomes. Fourth thing, and honestly the most important one, just stay invested. That's the whole Margaret story in one sentence. 2011, European debt crisis. 2013, government shutdown. 2018, trade war. 2020, the pandemic crash. 2022, a brutal bear market. Every single time, somebody on TV said the rally was finished. Every single time, the S&P kept climbing. 2,000 in 2014, 3,000 in 2019, 4,000 in 2021, 5,000 in early 2024, 6,000 by late 2024, 7,000 this January. Goldman Sachs ran the numbers and found that missing just the 10 best days in the market since 2009 drops your annual return from around 17% down to 12%. Miss the best 25 days, and your returns are basically cut in half. And those best days, they almost always land smack in the middle of when everybody's most scared. Let me throw out some real math here. A 35-year-old putting $500 a month into something boring like an index fund at a 10% average return for 25 years ends up around $665,000. Drop that to a more cautious 7%, and you're closer to $450,000. But even one extra point of growth from all this capital sloshing around can nudge that 7% back toward 8%. Bump the contribution to $1,000 a month, and that $665,000 turns into $1.33 million. That's millionaire status from being consistent. Nothing more dramatic than that. Fifth, keep an eye on the jobs riding alongside this. Financial planning, estate work, tax advisory, wealth management, legal services, all of it's about to get busier. The share of millennial and Gen Z clients at high net worth firms went from 8% in 2021 to 25% by 2024, which tells you where the next wave of business is coming from. And one more thing worth knowing. Cerulli figures roughly $54 trillion passes to surviving spouses first before it even gets to the kids, and close to $40 trillion of that lands with widowed women specifically. That alone is reshaping financial services aimed at women into one of the fastest growing corners of the industry. So, what do you actually do with all this? Max out what you can in tax-advantaged accounts. 401k, IRA, HSA if you've got one.
For 2026, the 401k cap is $23,500, plus another $7,500 catch-up if you're 50 or older. Stay broadly invested through low-cost index funds rather than trying to guess which sector wins. Pick up skills tied to this money in motion: finance, real estate, estate planning, whatever fits you. Keep some cash sitting around so you can actually move when something good shows up.
Stretch your thinking out to decades, not years. If you've got flexibility on where you live, pay attention to where wealth's piling up versus where it's draining out. And honestly, just talk to your family about this stuff now, whether you're the one inheriting or the one leaving something behind. Look, history's only handed us a handful of moments like this. The industrial boom after the Civil War, the post-war housing and pension surge, the 82 to 2000 bull run, and this current stretch since 2009 that's nearly tripled the number of millionaire households in the country. None of the people who caught those waves were geniuses. They just showed up and stuck around.
Right now, $124 trillion is already moving. That movement's going to push the economy forward, support prices, and open doors. The question was never whether this transfer is happening. It already is. The only real question left is whether you'll be standing in the right spot when it does. Margaret had no idea back in 2009 that she was catching something this rare. She just saw fear creating value and decided to move. The mechanism's different this time, but the scale's every bit as big. Trillions are shifting. A wave of new millionaires is coming, and people are going to look back on this stretch as the moment things changed. You know the scale now. You know the timeline. You know the playbook. What you do with it from here is on you.